Good evening, everyone. Thank you for your time and attendance. I think we're very, in fact, I know we're very proud of what we've achieved at Tharisa. Most people, when they hear of PGMs at the moment, think of distressed miners, CEOs, and an industry under huge pressure. Tharisa is a new age mining company that represents innovation, technology, and a new approach to producing PGMs and chrome concentrate in this country. What differentiates Tharisa from our peers is the fact that we have a massive open pit resource of some 22 years open pit life. We have 832 million tons of resource, and that's a great number, but what does it mean? It gives us the 104 million tons of open pit reserve. We're a co-producer of PGMs and chrome concentrate, which is the first time at this scale that it's been achieved in the South African Bushveld complex. We're located on the western limb, adjacent to Aquarius Platinum, up dip from Lonmin, and west of Samancor Chrome. The project is de-risked. You've seen it's in production. At steady state, we'll be producing 1.85 million tons of chrome concentrate and some 144,000 ounces of PGMs. We are squarely positioned in the lowest cost quartile for both PGMs and chrome. And that's by virtue of our single most competitive advantage, and that is the open pit that we have for 22 years. We have an effective logistics and marketing solution. Our chrome concentrate is delivered to major consumers in China, the major stainless steel, Tisco's, Bar Steels of the world, Sino Steels, and Min Metals. Our PGM concentrates are sold to Impala Refining Services on an offtake agreement. If we look at the mining, the unique nature of this project is that we mine all 6 middle group chromatite layers. Traditionally, only mined for chrome concentrates. We use a selective drill, blast, and mining methodology whereby we extract all 6 seams selectively. You'll see that the contained metal, we have in the resources some 169 million tons of chrome metal and 41.8 million ounces of PGMs, making it a significant PGM resource. Importantly, the fact that we're an open pit miner, we have a mechanized mining fleet, skilled, educated labor force. During all the industrial action within the area that we operate, we did not have one lost day due to unrest or disruption, which I think speaks a lot for the labor force that we have. All our permitting is in place. Water use license, mining regulatory approvals are all in place. We're committed to health and safety. We have one of the lowest LTIFR rates in the PGM industry and chrome industry. I think the most important slide today, or 2 graphs that I can show you, are the cost curves, whereby the red little bars represent our cost of production of PGMs. At steady state, we will be just above $500 an ounce. That's a platinum ounce, and you can see the average industry is pretty much underwater at the current platinum prices at the moment that we see. On the chrome side, it's a less transparent market. It's priced on a CIF basis, China main port, and you can see there we sit in the lowest cost quartile at $125 delivered CIF. Obviously, the UG2 byproduct producers are below us in terms of their cost structure. We have a large processing flexibility. We have 2 plants, 400,000 tons per month combined processing capacity, which allows us a number of benefits. First of all, it's an integrated process whereby we extract the chrome, then the PGMs, and then the chrome again. During power cutbacks that we've experienced in recent periods, we're able to shut portions of our plant down and still run through with maximum throughput at 400,000 tons a month, because we can bypass the grinding circuits and feed tails that we've historically stored. In terms of marketing and sales, I'm not going to dwell on this too long, other than to say we have a successful team based in Beijing that markets our chrome concentrates, PGM sold to IRS. But I think a key number from this slide is that we represented in the last financial year 16% of South Africa chrome concentrate exports to China and 9% of China's imports of chrome concentrate, and that number is growing as we reach steady state production. You'll see that we're in the final throes of reaching that steady state production levels. Our financial year end is a September year end, so these numbers are from 2014 September year end. You'll see that we've had nice growth in PGMs from the previous year, and just over 1 million tons of chrome concentrate produced. But importantly, even during that ramp-up phase, we've enjoyed a gross profit margin which our peers haven't enjoyed during this period. For PGMs during 2014, we enjoyed a 24% gross profit margin, and on chrome 10%. And as the units over our fixed cost increase, that number grows. You'll see an EBITDA margin there of 6.9%, and as we grow to steady state, that number grows to above 40%. So a highly profitable business, very strong cash generation, co-product model, dual revenue streams working very well. You will notice from our capital raised, we've raised some $457 million for this project since 2008, so fully funded, de-risked project, ready to go into maturity. Key differentiators. We took this ore body, we said, what do we do with it? We took a unique approach, took an innovative concept and proved it up, and now today have a long-term sustainable competitive advantage. The average depth of platinum mines in South Africa is 750 meters below surface. We have a 22-year competitive advantage over other underground miners. We have a strong track record of developing and bringing these projects to book, and we're very proud, as I said, of this project. There is further organic growth through innovation that we're undertaking at the moment, which allows us to extract more revenue and more yield out of 1 cubic meter of run-of-mine that we mine. What is our vision of this great platform that we have here? Is to become a leading natural resources company focusing on the PGM, chrome and steel raw materials market. We've got a very strict criteria for growth. We want assets that are similar to Tharisa, large-scale, low-cost projects that are in or near to production. Thank you very much for your time.